Welcome, everyone, and good afternoon. My name is Dr. Glenn Mort, and I'm the Executive Director here at FACCM, the Florida Association for Child Care Management. We're delighted you could join us for today's presentation, the second in our FACCM Connect series of live chats and webinars. FACCM Connect is a new series designed to bring our members and friends together with experts, thought leaders, and business professionals who can offer unique insights and expertise to support your schools. We hope you'll find this series valuable and engaging. But before we dive in, let me cover just a few housekeeping notes. Today's session is being recorded and it will be available for future reference. This is a webinar format. So as an attendee, you'll remain unseen and unheard by others on the call. If you have questions, we do encourage you to type them into the chat. We will have dedicated time for Q&A later in the session and look forward to addressing as many of these questions as possible. With that covered, it is my pleasure to introduce our presenter, Mr. Andrew Massie from Plastridge Insurance. And Andrew is a school and child care facility insurance specialist born and raised right here in Palm Beach County. He is a chartered property and casualty underwriter, a board member with the Palm Beach County Early Learning Coalition, and has been a great partner and friend with FACCM for many years. As a self-proclaimed third-generation insurance nerd, I know we are all in very good hands. So Andrew, we are honored to have you join us today. And with that, I will turn it over to you.
Thanks, Glenn. I appreciate it. Let me see here. Can you hear me all right, Glenn? Is this working?
Yes, hear you just fine.
Perfect. Perfect. I appreciate it. I appreciate everyone attending. The insurance market has been challenging, and I know I'm probably putting it lightly for a lot of you that have had to probably experienced this. Now, one of the one of the things that I've always said about our industry is that there's not a lot of transparency in the insurance world, right? That's probably not going to surprise anyone. So what I've done is I've kind of put together a peel back the curtains type course, a peel back the curtains type conversation where most of us know that the insurance market has been difficult, but we are seeing the light at the end of the tunnel where our conversation is going to be more positive today on the property side. We are starting to see a healthier market. So what I wanted to kind of talk through with everyone is what to expect going into renewal, knowing that hopefully on the property side, it's going to be a more competitive environment than it has been for years past. A lot of you have probably seen significant increases, one or two options at renewal. It's been a very uncompetitive market. So, Glenn, I appreciate the introduction. I work almost exclusively with schools and childcare facilities. I really enjoy doing it. I have a 2-year-old this weekend, so it's obviously very relevant to me, not just on the insurance side, but personally. I graduated from Florida State with a degree in risk management and insurance, and we love working with FACCM. I mean, just the fact that we have the opportunity to kind of bring some transparency to your members, Glenn, I appreciate because a lot of organizations are not necessarily doing this and setting up these types of transparent conversations. So what I want to accomplish today in the short time we have, I'm hoping to kind of cover a lot of material, a number of things, right? What's driving the healthy property market now? Because your typical childcare facility insurance program can kind of be broken up into two sections, right? So we have the property insurance for the building and your contents, everything you have in there. And then we have the liability insurance, right? Which is lawsuit, which is child gets hurt, family files suit against the school. And those are two very, very different markets. For the past 3, 4 years, the property market has been very, very difficult, and the liability market, not so much. But what's happening now is kind of a shift, a 180, where the property market is getting more competitive with more companies coming into the Florida market, and the liability market getting a little bit more challenging. So we're going to kind of talk through both of those. And what I always say when we're talking about the insurance market and seeing a positive shift, I think, frankly, it's important for everyone to understand how we got to where we are today, as far as why were we seeing significant premium increases for the past 3 years, right? I think it's really important for everyone to understand actually why that happened and what drove that, as opposed to just saying premiums have been going up. I think it's very fair for you as childcare owners and operators to want to know why that's happened, right? And what we've seen kind of in the past 3 years is, I think, three things have really contributed to why we've seen such significant premium increases. The first is kind of the obvious one, I think, when we think about why might insurance premiums be going up. We have seen a pretty significant increase in losses. And this graphic that I put up here, this is from the NOAA, and each of these little dots on this map, right, are individual $1 billion loss events in 2023. And it's very similar for 2024. So now we think of hurricanes, right, in Florida, but insurance is national, insurance is even global at a lot of levels. So while we think of hurricanes, these events are not just storms. I mean, it's hurricanes, tornadoes, wildfires, obviously, in California is the most recent one that everyone's paying attention to, devastating earthquakes. All of that affects the industry at kind of a 30,000-foot level. And we've seen a serious increase in the frequency with which we're seeing these significant events. So much so, right, that the NOAA, the historical average, right, for individual $1 billion events in any one given year for the past 43 years is 8.5. Okay, so what that means is that on average in any one year for the past 43 years, we've seen 8.5 individual $1 billion insurance events. But the 5-year average is 20.4. So the difference in how often we're seeing these significant catastrophic loss events is a 2.5 times increase. The average has grown from 8.5 to 20.4. So that's a major, major shift. That's kind of the first leg of this. I think the other one is inflation. And this one, we've all seen this. This is not just an insurance thing. This is a life thing. Unfortunately, it's, at the grocery store, prices have gone up. The reality is that it would likely cost significantly more to rebuild your childcare facility today than it would have 3, 4, 5 years ago, based on increases in cost of construction and labor, materials. So that's gone up as well. And that's kind of being priced in when, and some of you may have even seen carriers increase your limits. So now not only is the pricing going up, but you're actually having to buy more insurance. So that's kind of the second piece of this. The third one is, in my opinion, the most meaningful. And I am probably not going to shock any of your members, Glenn, when we say that in Florida, we have a very serious problem with litigation, right? We have a lot of fraud, a lot of frivolous litigation. I think most of us know that. I don't think you have to drive very far down the highway to see the billboards and to see all of the how litigious Florida is, particularly South Florida. But to put it into perspective, our insurance commissioner, every year he puts out kind of a state of the market, right? Similar to the State of the Union. What are the problems in our industry? How can we fix it? And one of the statistics that he started referencing in 2019, that he's referenced in every report since, does an amazing job emphasizing how significant of a problem this is in Florida. And the statistic reads that Florida buys about 8% of the property insurance in the country, okay? But about 76% of the country's property insurance litigation takes place in Florida. So one state is accounting for over 3/4 of the United States property insurance litigation. That's what the industry has been up against. Frankly, this is why we've seen insurance companies leave the state in droves. I mean, I think we're at 19 insolvencies in 24 months, 36 months. So the problem and the reason that a lot of you have likely seen significant increases in your property insurance rates is because there's been no competition, zero. A lot of our clients the past 3 years, I mean, it's been one or two options, and maybe Citizens, the state program, which is far inferior coverage wise. So it's been very challenging, and I know that's a lot of context, but it's important to me. It's important that everyone kind of understand why, as opposed to what you've probably seen and heard in headlines saying property insurance rates are going up without much justification, right? Now, that being said, our legislators in 2023 passed some significant legislation targeting the fraud in Florida, targeting a lot of these frivolous lawsuits, and it's working. It's working well. We've seen about a 63% decrease in these insurance companies' cost to litigate claims. So on average, what does it cost them to actually litigate each individual claim has come down significantly, 63%. So what does that mean for you, right? What does that mean for a child care facility going into their insurance renewal in 2025? What's happened is the downtick in litigation has definitely started to kind of spark a lot of new interest in Florida. There's a number of companies that are coming into the market that have either left the market or paused on new business or are getting into Florida for the first time. So it is becoming much more competitive of an environment relative to the past 3 years. And I put this up here because this is a real life example, and this is a renewal that I did a couple months ago with a client where we had 5 different options. So I'm not saying this is going to be the case for everyone, but it's refreshing because for years it's been one or two. So what I want everyone to come away with is that on the property side, there's light at the end of the tunnel, right? You guys can expect definitely a more positive property insurance renewal when you're sitting down with your agent this year. I think most facilities are going to be seeing multiple options this year where that may not have been the case last year. And frankly, on this side of things, property, we're seeing decreases in a lot of cases. So that's refreshing. Now, the liability market is a little bit different, right? We're starting to see a lot of competition on the property side. The liability side right now is very similar to what happened in the property world 3 or 4 years ago, with a lot of companies pulling out of the market. These companies that I put on the screen, Philadelphia, Nationwide, AmTrust, Church Mutual, it's very likely that everyone in attendance today that has either worked with or is currently working with one of these companies. It's a big share of the market. And unfortunately, all of them are writing no new business, and two of them have pulled out of the market entirely. Philadelphia and Nationwide. And Philadelphia's been here for decades. Okay, so um, many of you have probably gotten non-renewals from some of these companies. I want to with the liability market, when you're seeing a non-renewal, there's a couple of things that I want to encourage everyone to keep in mind, right? Because the challenge is when you're going from a Philadelphia, a Nationwide, a Church Mutual, a Harleysville, these are specific child care facility programs, and they're designed for that risk. They're designed for that class of business. When you have to move away from them, right? And I wish I had a better way to phrase this, but it's almost like that's the top tier. And then once you get outside of that, a lot of these other companies are not necessarily the same. And there's some things that I definitely think everyone should look out for. Um, one of these has to do with your limits. Okay, so your liability policies that protect you if someone sues you, if a child gets hurt, if you have some sort of abuse or molestation allegation, are typically $1 million per occurrence and 2 million for the policy for the 12 months. What we're seeing a lot of these companies do is they're putting the $1 million limits for general liability, meaning slip and fall, very standard claims, but they're starting to put lower sublimits for specific types of claims. So while you might see that $1 million limit up at the top, some companies are starting to put lower limits, 100,000, 50,000 in some cases, on professional liability. So things like negligent supervision, any one of your staff members being involved in a suit for something like that, abuse and molestation, the high risk things, the reason that you buy insurance, some companies are starting to sublimit. So it's very frustrating. Um, we're also starting to see a lot of new exclusions. We're starting to see a lot of companies add animal exclusions and firearm exclusions, assault and battery, a lot of stuff like that. So I think kind of what I would leave everyone with, and I know we're gonna do some questions and answers, and I'm happy to. Um, First off, this is manageable, right? There's a way to navigate this efficiently. On the property side, it's good news. I think that market's competitive. Most of you are going to see decreases on the property insurance. For the liability, I say this and I encourage my own clients to do this as well. I would encourage everyone to push back with your agent pretty aggressively. I would encourage you to ask broad questions like, do we have any new exclusions that we didn't have last year? Do we have lower limits for certain things this year that we didn't necessarily have last year? Because you have to have right now, more so than ever, very, very interactive and thoughtful conversations when you're renewing your insurance. Because if your carrier's adding something that changes your coverage, an animal exclusion, field trips, anything that changes, you need to know that because it could definitely impact the way that you operate. So I think I would just kind of say the transparency is very, very important. Having the thoughtful conversation as opposed to just here's your renewal and here's your DocuSign link is very important in this market. So I think we did okay on time. That's a lot of information. I know we kind of wanted to keep it to 20 minutes, but Glenn, do you guys kind of want to open it up to questions, or how do you want to?
Sure. Yeah, I think this is probably a good time to open up the floor for some questions. But Andrew, I have to tell you, I was absolutely correct. We are in great hands with you. I wrote down plenty of notes and comments here. But we do have a couple in the chat already. So at this
Sure.
point, why don't we open it up for our Q&A? And if you do have any questions, feel free to put it in the chat, and we'll try to get to as many as we possibly can. Um, but Andrew, let me start with a couple that I wrote down, and there's
Sure.
also already a couple in the chat. But first of all, from the chat, do you or your company only do freestanding schools and centers, or would a home-based facility be eligible for your services?
We do both.
Okay. All right. So Peggy, yes, Andrew will do home-based facilities. Um, so Andrew, you talked a little bit about the shopping experience. I want to kind of pull the thread on that just a little bit. So as a school owner or a home-based facility owner, can you just talk a little bit more about what that shopping experience should look like? You mentioned that we should ask some additional questions, but are there certain things in certain areas that we should specifically target or be focused on when it comes to those questions that we should ask, and just to make sure that we're putting uh, the best policy in place for our center and our
Yeah.
school.
Yeah, that's a critical question. The reason it's so important, Glenn, is because in the insurance world, that process is much different than any other relationship owners are going to have, childcare facilities are going to have, because the insurance industry is structured in a very unique way in that each agent, right? So Plastridge, every agency, the insurance companies will only work with one. So if I'm approaching, for example, Philadelphia for a quote, then another agent is not able to approach Philadelphia for a quote on behalf of the childcare facility owner. So the challenge is that when you're selecting an agent, and by the way, I hope this doesn't I don't want this to come across as salesy, or because this is genuine, but you have to have you have to pick an agent that you trust. I mean, that's just the bottom line, because you have to work with an agent that's going to go out on your behalf and approach every single company to bring back the best option available every year. I mean, there's no way around that. And frankly, that's one of the reasons I started getting so involved in childcare is because from the insurance side, I noticed very underserved as an industry. I mean, a lot of the feedback that I was getting from FACCM members and everyone was kind of our renewal basically consists of a DocuSign link that says, here's your renewal. And that's not enough, Glenn. You definitely have to have an agent or push your agent to show you multiple options and everything that's out there. So I hope that answers your question. I know it's a little nuanced because the structure is different, but
Absolutely. Uh, you and I've had numerous conversations over the past year about how the insurance industry has fluctuated this year, and it's really been a kind of a wild ride.
yeah.
One of the things that I hear from members all the time is, how do I know that the insurance policy that I signed on for is the best for my specific school? So thank you for expanding on that. So the next question that I wrote down was, how much notice does a company have to give me in order if they are going to be a non-renewal of my policy?
I believe the legal requirement is 45 days, Lem.
Okay, so
Yeah.
45 days before it expires, if they're not going to renew me, they should be reaching out to me.
Yeah. If they don't, if they miss the window, which happens, sometimes they have to extend the coverage and give you at least 45 days to replace it.
And the follow-up to that is, so what should I expect as an owner if the insurance company decides not to renew my policy? What types of things can I do or should I do? What should I expect?
Yeah. Yeah, the preparation is really important. So here's just to give you a real kind of behind the scenes example of why some of the nuances in our industry can be frustrating, Glenn, as far as expectations, is because those companies that we talked about, kind of the top tier companies, they rate their policies, meaning they determine the premium based on the average daily attendance, right? So however many children are there on an average daily basis, that's what you pay based on. And that makes sense, right? That's the risk for them. That's the exposure. Once you get out of that tier, what some of these other companies do, and as far as expectations go, this is where you may see a significant increase in your premium, is some of these companies rate, and it drives me crazy, based on the license capacity of the facility, which is so frustrating because that's not always the exposure. In fact, it rarely is. So it's very frustrating. I would say as far as expectations go, if you have a non-renewal, if you know you're going to get a non-renewal, I would encourage you to make sure you sit down with your agent, have a meeting, to talk through what we can do to best prepare for alternative options. Because there's a lot of stuff that you can and can't do to make your operation more attractive if you're staring something like that down. You just have to have the conversation.
Right, right. Okay. All right. Let me turn to the chat here. Do you have a database for those insurances that accept home base? Well, Plastridge accepts home base, right? So, am I correct?
Yeah, and maybe I think based the way the question was phrased, Glenn, maybe I should clarify. So Plastridge, we're an independent agency, meaning we represent the school or the child care facility, and we have access to hundreds of insurance companies. So we go out and shop it to all them. We're not, one specific insurance company. So just to clarify.
Thank you. So, I would recommend everyone call you if they need their insurance needs.
I appreciate it, Glenn.
All right. Let me get back to the chat here. And again, if anybody else has any other questions while we're looking here, let's pick Andrew's brain while he's here. I'm scrolling through. I don't see any that we haven't addressed up to this point. All right, so we'll give it a few more minutes.
Sure.
And if not, we'll let everybody get on with the rest of their day. Um, Question is, will this recording be available and forwarded to us? The answer is yes. Once we finish with all of our FACCM Connect webinars, we do make a recording of this and we do send it out to all attendees. So you can expect that within the next 48, 72 hours. So you'll be able to refer back to this as well. All right. All right. Anything else?
I would say, the just the fact that people are attending this is refreshing because it's proactive. And what we're talking about right now on the liability side, Glenn, and I know we've had a couple of conversations about this. It's early. I mean, this is really just starting to get scary. So I hope I'm wrong, of course, but if that keeps trending the way it's trending, I think we're gonna start seeing a lot of non-renewals in the next 6 to 12 months. And that's obviously gonna affect, your members. So anything I can do to help, I'm always happy to.
Okay. Well, we will put both my information and Andrew's information back up on the screen in just a second. But seeing no additional questions, let me thank you once again for joining us today, and a special thank you to Andrew for his insightful presentation. We're always grateful for your time and your expertise. But before we wrap it up, I do want to mention one additional event that is coming up in the next few weeks. Everyone, please circle your calendar and mark your calendars for Thursday, February 6th, when we will be joined by FACCM's lobbyist, David Daniels, for a legislative town hall. Whether you're a FACCM member or simply interested in learning more about how we support early learning centers, this town hall will offer insights and a chance to contribute to the conversation that impacts your business and your community directly. So this is your opportunity to share your concerns, your challenges, priorities with us and your peers. So we encourage you to come prepared to tell us what's on your mind on that day. So you can register for this event right now using the QR code on the screen. Or if you subscribe to our mailing list and get follow-ups from us, you'll see us on social media. You will receive the registration information through those channels as well. So this next event is just a glimpse of what we have in store here at FACCM and Apple. We're excited to keep providing you with these resources and your school and your communities as well. And finally, if you have any additional questions or would like further information, my contact details and Andrew's are on the screen now. So feel free to give us a call at any time. But for those of you that have any specific insurance questions, we cannot recommend Andrew enough. He has, like I said at the beginning, been a great friend and a great partner with FACCM. And please, if you do not know Andrew, ask him about his little daughter. He'll talk for 15, 20 minutes. And she just gets more and more adorable every year. So Andrew, thank you for sharing your family with us as well. So with that, I want to wish everyone a wonderful day. For our friends up in the north, stay warm. And we look forward to seeing you again very, very, very soon. So thank you again, Andrew. And we wish everybody a happy day.
Thanks, Glenn. Thanks, everyone.